plus a water purifier, bug out bag, and more. It's the complete survival kit your family needs to ride out natural disasters, civil unrest, or worse. Plus, it makes a great Christmas gift, but it's only available through Black Friday. So head over to mypatriotsupply.com to check out everything that's included. With all the uncertainty in the world, disaster preparedness is more important than ever. Go to mypatriotsupply.com and get prepared today. That's mypatriotsupply.com.
I was out working, a car out of the blue crossed the center line and crunched me. There was nothing I could do. Everybody thinks that they can do their own attorney, but you can't. There's too many legal hoops. There's too many options.
Insurance companies love taking advantage of people who try to handle their cases alone. Seriously injured? Call Konowski-Bresny. We get your worth.
I'm very happy with the result. I don't think any other attorney could have done a better job.
Call Konowski-Bresny at 888, the letter U, count and the number 2, or see me on the web at bresnylaw.com.
Individuals and businesses with tax problems, listen carefully. If you owe over $10,000 in back taxes or have unfiled tax returns, U.S. Tax Shield can help you take back control. The IRS can seize your bank accounts, garnish your paycheck, close your business, and file criminal charges. Our team of tax attorneys can stop collections and get you protected. U.S. Tax Shield offers a price protection guaranteed quote to get you protected today. U.S. Tax Shield is A+ rated with the BBB, so call 800-466-9625. U.S. Tax Shield, 800-466-9625.
This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston. The Money Matters Radio Network.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Owning Real Estate in Retirement. Mike, when we talk about someone who might be considering a move from where they've lived pre-retirement to a new location, what are some of the main things they need to consider?
Yeah, I think that they need to focus on the costs first and foremost. I know a lot more goes into a decision like this than the costs alone, but what I find consistently is that folks in retirement overestimate how much they can save by moving and underestimate how much they're going to spend as they age to stay in their home. And so both of those factors are important when considering this big decision of, hey, do I consider downsizing or moving to another area?
One of the other things that we've seen over the past few years is that some of those estimates of costs can change quickly as well. I think about insurance in Florida as an example, property taxes in parts of the country. These are things that you need to account for, and that those costs might change as you go through retirement.
Yeah, I mean, some of them are easy to identify. Like, yeah, insurance costs have sure gone up a lot, and maybe they'll continue to do so. Electricity costs are another one. The others, though, are much more difficult to quantify. Like, I currently snow blow my driveway. How much longer will I be able to do that? How much longer will I be able to climb up the ladder and clean the gutters? Like, these are really complex questions that you need to very much think through as you age in your home.
Our guide is titled Owning Real Estate in Retirement, and there are 2 ways to request it. The first is by calling 800-393-4001. The second is by going to armstrongadvisory.com. Again, the guide is titled Owning Real Estate in Retirement, and you can request it at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Mark Varner is the CEO of Veterans Development Corporation. Mark faithfully served his country from 1981 to 1984, and we're thrilled to have him as a partner and presenting sponsor of the DAV 5K Boston. Mark comes from a proud military family that includes his father Victor and brother Timmy. Mark talks often about how serving his country was one of the greatest achievements of his life, and it's one of the main reasons he chooses to give back to this special community. Mark is honored to continue the legacy that his father started when he built Veterans Development Corporation. Working to help many disabled veterans and their families has become a lifelong goal for Mark, and it's why he's taken the time to fully support the Disabled American Veterans Department of Massachusetts. You can join Mark and help our great American heroes today by making a donation to support the DAV Department of Massachusetts. Please visit dav5k.boston. That's dav5k.boston.
Estate planning doesn't have to be complicated. Cushing & Dolan's new guide, The Simplicity of Joint Revocable Trusts, shows couples how to stay in control, avoid probate, and help protect what they've built for their family. Call 866-848-5699 right now and ask for your free copy today. That's 866-848-5699. Or request it online from our website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck Mike Tucker with you today, and we got a nice little week that we've got planned out here as I take a look at the calendar. It's not, a 10 out of 10 week where you're sitting there saying, oh my goodness, like, how am I going to sleep? I'm so excited about all the stuff we're going to be getting. But I put it firmly as like, a solid 7 out of 10. On the economic data side of things, a couple of decent reports that we're going to be getting. Fed minutes on Wednesday, which I'm more interested in now, just given some of the, things that we're talking about as far as the December meeting, whether that is on, off, or, somewhere in between. And so I think
to be clear, the things we're talking about is many Fed meetings being,
usually
brought
I don't
out
care
in front
about
of
the
a
Fed
mic.
meeting minutes.
I know, being brought out in front of a mic saying we're not sure about this December rate cut. That was previously pretty baked into markets.
Which is kind of interesting to me.
Yep.
So I'm interested to hear what we get from the Fed meeting minutes. On Thursday, we are going to get the jobs report for September. So, a little anticlimactic just because it's kind of like, okay, you guys collected this data 2 months ago and now you're going to show it to us, but it'll still at least fill in a data point that we've been missing. And I think that'll be informative. And, by the way, we can compare this to the AI-generated jobs reports that Mike and I shared back that first week in October. And we'll see whose artificial intelligence was closest to what we actually get from The Bureau of Labor Statistics.
So that September jobs report was fully collected and not released. So we will get a release on unemployment rate. We will get a release on jobs created or lost. The October report.
You can get a partial. You won't get the full one.
And when will we be getting that one?
We don't know.
We don't know. Okay. And the October report, again, because it was not fully collected because of the government shutdown, we expect to get the establishment survey, which is the survey of businesses. So we'll get the number of hires or fires. We will not get that unemployment rate read because surveying 10 times as many households is apparently more strenuous.
A little bit of work,
than getting the survey.
A little bit of work. So we get the September jobs report on Thursday. I do not believe we are going to get weekly jobless claims from the DOL then yet. I think they are still ramping back up, so I anticipate next week maybe is when that starts to happen. We'll get existing home sales data Thursday as well, so that's going to be fun. And then on the earnings side of things, everyone's kind of focused on Nvidia on Wednesday just because the last couple weeks has not been great for AI adjacent stocks, and obviously a monster report from Nvidia could save that section of the market, which, by the way, I was going through my notes. I take daily notes on like what is going on in markets just because it's nice to be able to look back on them and kind of see what was happening.
Chuck's diary is even more boring than the typical diary.
It is. Like, it's, most of the time it's like, oh, I wonder if he loves me. I wonder if she... Mine's like, does Nvidia love me? And it's, it's just kind of, it doesn't talk in that voice, but it would. In any case, Nvidia, bunch of times in the last couple of years, has come in and saved markets that looked a little bit dodgy. Can it do that again? Beyond that, other big names that I think are interesting. This is the week that we get all the retail earnings. Home Depot on Tuesday, TJX, Lowe's, Target on Wednesday. The Target is gradually drifting towards irrelevancy. It still is irrelevance. Irrelevance. Yeah, we don't need to add the Y at the end. And then on Thursday, we've got Walmart coming out with earnings, which is obviously a big one as well. So I think that this is, I'm not going to set this up and be like, this is, the most pivotal week ever, but Nvidia is going to give us some clarity, hopefully, on, what the market does. Or, look, there's always the potential that it just acts as a vehicle for a bunch of people to go out and spend a bunch of options premium only for those options to expire worthless when the volatility doesn't materialize, which in turn then helps out our good friends at Citadel Securities to allow Ken Griffin to buy another dinosaur skeleton,
right?
Which is, fun too. Like, everyone needs a second one to keep the first one company.
Sometimes we joke. These are actually serious things that
right. Ken Griffin bought a dinosaur skeleton and probably wants a second one.
One thing that I don't think you mentioned was the import price index. We do get that Tuesday. Almost nobody has ever cared about this, but people are actually looking at it this year for one reason, to try and determine who is actually absorbing tariffs.
Yep.
So you can actually take a look and say, oh yeah, this was the price of all imports as of October compared to October of 2024, which hypothetically tells you, oh yeah, are Chinese suppliers eating the tariffs? Are we eating the tariffs? Where is it coming from?
Because the import price index does not include the tariffs, and so you can see if there are discounts that are being applied relative to where they previously were.
I think that's technically the first data point since the government has reopened. So, again, I'm desperate for anything there.
I haven't seen confirmation that that's going to be published.
Okay.
I know it's on the schedule.
Maybe I'll be disappointed.
I haven't seen confirmation that it's been published. So it's a hard maybe. Yeah. The other thing that we are getting now every week, which in the absence of other employment statistics, we do pay attention to, ADP is reporting their weekly 4-week moving average for their employment data. Again, it's kind of like, okay, what do we do with this? Because ultimately, there's two reasons why it doesn't matter normally. The first is that historically, ADP has not been a great predictor of job gains in the BLS report. It's gotten a lot better if you look at kind of rolling 3-month averages over the last year or two. So I think maybe there is a little bit more value in that at this point. The other piece is that when we look at how the Fed makes policy, the Fed doesn't make policy based on the number of jobs added. it makes policy based on the unemployment rate, and ADP never gives us an unemployment rate. So it's kind of like, okay, like what's the point of this then if I'm not getting it? But in the absence of other, real-time job data, sure, I'll always take more. Like, I'm not going to say no.
Yeah, I could probably detect big swings, but other than that, not terribly useful, I think.
When we're looking at some of the other supporting job data, other things that we've looked at, recently, the Indeed Jobs Posting Index, they don't have the newest data tabulated for it at the moment. I don't know why, but the last week or so has not yet been updated, so we're still running with the October 31st data. So nothing interesting to report there. Paychex reports a monthly snapshot of small business hiring. There's nothing to report there because, again, it's, we've already done the month of October. We're now waiting on November. So I think, we're kind of in this holding pattern where we want more data and we don't have all the data that we want now. But this week's still going to give us, a little bit of information that I think will be informative. Let's take a quick break. When we come back, let's dig in more to preview Nvidia's earnings. I think there's a lot to talk about, and we will do exactly that after this.
Missed one of our shows? Catch up anytime by asking your Alexa smart speaker to play The Financial Exchange. This is the Financial Exchange Radio Network.
Your home has been the center of your life for years, maybe decades, but as you enter retirement, its role starts to change. Hi, this is Mike Armstrong from the Armstrong Advisory Group. The focus shifts from what your home means to how well it supports your lifestyle. For many people, the space that once made sense for a busy family now requires more time, energy, and money than it should. Retirement is about simplifying, choosing a home that's easier to maintain, closer to the people and services that matter, and better aligned with how you want to live may be the right move as you head into your later years. Our new guide called Owning Real Estate and Retirement tackles a number of different issues that may help you turn your home into a source of flexibility and freedom, helping you plan for the years ahead with comfort and confidence. Get your free copy today by calling 800-393-4001. That's 800-393-4001, or you can request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Mark Vonner is the CEO of Veterans Development Corporation. Mark is a career military man, having served nearly 20 years, and we are so proud to have him and his business as a key partner and a presenting sponsor of the DAV 5K Boston. The DAV Department of Massachusetts does incredible work, and it's one of the first organizations that Mark became familiar with after his military service ended back in 1984. As Mark built his company, he knew he'd be giving back to fellow veterans who needed jobs, support services, medical supplies, and so much more. Mark works with disabled veterans every day, and it's one of the key reasons why he's such a big supporter of Dan Stack, the DAV Department of Massachusetts, and the DAV 5K Boston. You can join Mark Vonner and his team and make a donation to the DAV Department of Massachusetts or become a sponsor of the DAV 5K Boston. Simply visit dav5k.boston. That's dav5k.boston.
Planning for the future is challenging. At Cushing & Dolan, we believe that sometimes the simplest step can make all the difference. A joint revocable trust allows married couples to stay in control of their assets while making sure those assets are distributed properly. Our new guide, The Simplicity of Joint Revocable Trusts, shows how couples can take advantage of both the $13.99 million federal exemption and the $2 million Massachusetts exemption without losing benefits when one spouse passes away. This trust may help you avoid probate, reduce estate taxes, and even provide a step up in basis that can save your family money when it's time to sell your home or investments. Learn how to make your estate plan work smarter, not harder. Call 866-848-5699 right now and ask for your free guide today. That's 866-848-5699. Or you can request it online from our website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up
because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to
to learn more.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you by the U.S. Virgin Islands Department of Tourism. Your next incredible vacation is a click away, and if you act fast, you could be on St. Croix to experience their Crucian Christmas Festival taking place this December through early January. Discover the magic of this long-standing tradition with incredible food, music, and entertainment, or just go to soak up the sun, stroll along white sand beaches, and feel the rhythm of the heartbeat of the islands. The USVI is America's Caribbean paradise. Plan your escape now at visitusvi.com. That's visitusvi.com.
Mike, we mentioned in our first segment that Nvidia reports earnings after the bell on Wednesday, and I do think this is coming at an important time for stocks related to artificial intelligence. I'm not saying that it comes at an important time for the overall, AI trajectory or the overall AI business, but there are some stocks that are tied to the AI trade that are showing signs of bending a little bit. And I think if Nvidia were to come out with some signs, not of weakness, but just lacking the pop and pizzazz that these earnings have had for the last couple of years, it does suggest that it could be something to worry about for the stocks in the short term without saying anything about where they go longer term.
Yeah, to be clear, it does seem to both you and I that investors have been scrutinizing some of these fastest growing companies over the course of the last 2 to 4 weeks.
I said that the last week of October and the first week of November potentially represented a major inflection point that we could look back on years from now.
So obviously Nvidia could come out Wednesday afternoon and knock the cover off the doors, as they have many times.
The cover off the doors.
The cover off the doors off the hinges?
Knock the cover off the ball?
Cover off the ball, door off the hinges.
I like knock the cover off the doors. That's almost as good as smooth as a cucumber.
See that door cover over there?
It's cucumber, yeah.
We're going to knock it off.
It's as smooth as a door knocked off the cover.
You guys don't have covers on all your doors? Really keeps them in better shape long term.
It does. It's kind of like the plastic couch covers.
Yes, yeah, just like that.
Yeah.
But anyway, it could come out and knock the covers off the doors, and that would be par for the course for Nvidia. I'm trying to think through precisely what CEO Jensen Huang could say about their earnings that would genuinely, I could see a few things where it just kind of furthers that narrative of, oh, we got to scrutinize this a little bit further. But is there anything they could do that would likely severely worsen the story around this scrutiny? I mean, it would have to be pretty disappointing sales numbers, I think, to really shift the narrative. Like, oh, yeah, we are not seeing growing sales from some of our biggest customers. I feel like we've already got confirmation that we are seeing that from their biggest customers who reported 3 weeks ago.
I don't know that we're going to get anything this quarter from Nvidia that is particularly concerning.
It'd be surprising to me, yeah, just because, again, we've already seen confirmation from elsewhere that the companies that represent their biggest buyers are planning to expand further.
The danger zone for Nvidia, in my mind, is 12 to 18 months from now. And the reason why is at that point, you'll be able to say, okay, like, do we need to, you've gone through this huge ramp up in CapEx then, and, further development of the actual product. And now you've got to get to actually showing, hey, companies and people are willing to pay up for this in order to offset all of the CapEx that we are doing, because I can guarantee you, like, again, you will get to a certain point where this amount of CapEx is going to start impacting financial statements through depreciation. And to me, that's like 12 to 18 months from now. And will we hear it from Nvidia first? Probably not, because they always report after the main earnings cycle. They're always 3 to 4 weeks after everyone else in tech reports. And I think the question for Nvidia is, look, do businesses, right now you're in a situation where companies are saying, look, we just need to grow the data center pie, because we think that there's a chance that if we spend $250 billion, it could represent a $1 trillion, a multi-trillion dollar opportunity. And so companies are doing that. As it becomes clear whether or not that is going to become a reality, those companies will start to make decisions as to whether they want to continue this, because the question that's out there, and by the way, we first raised this in August, so I would like to thank the Wall Street Journal and CNBC for listening to the Financial Exchange and starting to publish pieces on this, because there was one that was published last week. It was like the big question everyone's asking right now is about the depreciation of GPUs. The GPUs, graphic processor units, it's what these NVIDIA chips actually are and what they're based on.
Yeah.
They were originally designed to process like 3D graphics for, playing like Counter-Strike and stuff like that.
Instead, you're going to be running them hot in data warehouses 24 hours a day. So how long do they actually last?
Correct. And so this is the question, which is, look, if you're spending like $50,000 on an NVIDIA chip, how much use do you get out of it? And how often do you need to replace it? Because right now, what is fueling NVIDIA's growth is companies building out initial capacity. If companies do need to replace those chips every 2 to 3 years, then it becomes something where that's a huge ongoing operating expense that they have, and that impacts the profitability of the companies making AI. If they don't need to replace them every 2 to 3 years, they can get 6 to 7 out of them. Then at some point, NVIDIA's growth rate plateaus and maybe even rolls over because you don't need to replace these every year, and that means less profitability for NVIDIA. Again, I don't see any world where you sit there and you're like, the chip makers are going to make billions, the AI companies are going to make billions, and the users are going to make billions, because that's never happened in any tech revolution of any kind. There's always someone who's a loser in that piece. We just don't know who it is yet. I'm not saying like Jensen Huang's a loser. I think he's a huge winner. But there's going to be some company, some industry or sub-industry that loses. And look, you're already starting to see kind of the commoditization, I like commodification though, of AI, and that if you ask people for most general things, they'll say, yeah, like if I put a query into ChatGPT or Gemini or what's the Amazon one, Anthropic, Claude, if I put, a general query into one of these, I get basically the same answers from all of them. There are some, niches within them where, from what I gather, coding people generally prefer Claude for some reason, and some of the submodels in there. I don't know how, I don't know why, because I don't understand coding, but this is what I gather, is that they prefer Claude. There are other areas that, prefer, different ones, but in general, if I'm asking, hey, give me a list of, 16 restaurants that, offer tacos on them, they're all generally the same.
I think where I get caught up and concerned, and I'm not the only one, is when you ask all sorts of businesses, whether it's the creators of the platforms, the generative AI tools themselves, or the users of them, they all will speak to the useful tools that they can do. And we've got a story covering how even some small business owners are using these tools successfully for their businesses. But then when you start asking about the financials behind that, and like, oh, but yeah, it seems like it would cost you $250,000 to run those queries, and is that really worth it? They shift the conversation. The conversation then shifts to, well, yeah, these tools are useful, but what we're really going for is this artificial general intelligence, the AGI, the holy grail of AI, where it's going to be this unknown future entity that can do all sorts of new things. And there are clearly some really useful use cases for AI, But when you press somebody on the P&L, it's, well, just wait for this future thing to come about. And I guess the point is, the longer time goes on, the more clear what that future thing actually looks like and if there's any value to it. Because the spending compared to the payoff of the tools that are available now, useful, helpful, but not paying for themselves. Even close to it. Right?
No.
Am I miscategorizing anything?
I'm just having flashbacks to all of the talk we had about crypto like 6 or 7 years ago when people were like, oh, crypto's going to be able to do this and do that.
Yeah.
And now it's like, okay, like it's still pretty good at moving money, across borders, sometimes legally, sometimes through laundering. But otherwise, crypto's not really doing much for the average person because
when
it's
the
way too
math
complicated.
stops working, you start making new promises, and that's what concerns me.
Quick break here. When we come back, we got Wall Street Watch.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Hi, this is Chuck Zodda from the Armstrong Advisory Group. Your home is more than just a place to live. It's part of your story. In retirement, real estate can play a powerful role in how you manage your wealth and plan for the next generation. Passing property to family members isn't always easy. One child might want to keep the home while another prefers to sell it. Maintenance costs, taxes, and distance to healthcare services are all important factors that need to be considered, which is why having a clear plan can help prevent family stress while keeping your wishes front and center. Our new guide, Owning Real Estate in Retirement, is designed to help you fit your property into a long-term strategy that supports your life today and preserves what matters most for your future. Get your free copy right now by calling 800-393-4001. That's 800-393-4001 or request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams, your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Mark Vonner is the CEO of Veterans Development Corporation. Mark is a career military man, having served for nearly 20 years, and we are so thrilled to have him and his company as a key partner and the presenting sponsor of the DAV 5K Boston. Mark comes from a proud military family, including his father Victor and his brother Timmy. Mark talks often about how serving his country was one of the greatest achievements of his life, and that's one of the key reasons that he chooses to give back to this special community. Mark is honored to continue his legacy that his father started when he built Veterans Development Corporation. Working to help many disabled veterans and their families has become a lifelong goal for Mark, and it's why he's taken the time to fully support the DAV Department of Massachusetts. You can join Mark Vonner and Veterans Development Corporation and help our great American heroes today by making a donation or becoming a sponsor. Simply visit dav5k.boston. That's dav5k.boston.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about joint revocable trusts. Todd, a lot of people think estate planning is complicated or something they can put off. Can you explain how a joint revocable trust can actually make things simpler for couples who just want to protect what they've built and keep things easy for their family?
Sure. Joint trusts are really so underutilized, but they're really the most important and easiest way to do planning. Many people think of two trusts, right? Splitting everything between a husband trust and a wife trust. Well, This already makes it simpler. If you have just one trust, you can both put your assets in the trust, whether you contribute the joint bank account or the joint brokerage account or the joint real estate and rental properties. It's easy. Just put it all into one trust and you're both trustees. So funding is simpler, operation is simpler, and most importantly, you can actually get a better result for moderate estates from an estate planning standpoint. Because on the first death, you get to cram down all the assets that are in the joint trust to get a step up in basis, whereas if you've separated the assets between the two trusts, you're only going to be able to cram down half as much. And if you do the planning right, you can actually use these trusts to get a double step up in basis when the surviving spouse dies.
Learn how you can avoid probate, eliminate estate taxes, protect your kids' inheritance, and keep your money in your family. Request this brand new guide from Cushing & Dolan. It's called The Simplicity of Joint Revocable Trusts. Call 866-848-5699. That's 866-848-5699. Or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, after a bumpy week, markets today are mostly quiet, dipping into negative territory as investors ready for a new flurry of third-quarter earnings, including from AI and chip giant Nvidia, as well as retailers Home Depot, Target, and Walmart. Wall Street's also bracing for the delayed September jobs report due out Thursday morning. Right now, the Dow is down by 0.2% or 88 points lower. S&P 500 down about 0.1% or 8 points. NASDAQ down about 0.1% as well. Russell 2000 is down 0.1%. 10-year Treasury yield is down 1 basis point at 4.135%, and crude oil down about 0.2%, trading just below $60 a barrel. Alphabet jumping nearly 5% after Warren Buffett's Berkshire Hathaway disclosed it took a stake in the Google parent company in the third quarter and further reduced its stake in Apple. Speaking of Apple, the Financial Times reported that the tech giant is ramping up its preparations around identifying and appointing a successor to CEO Tim Cook. Apple stock is down about 1%. Meanwhile, the 15-day standoff between Disney and Google is over after both companies reached a deal to return ESPN, ABC, and other Disney networks to about 10 million YouTube TV customers. Disney shares up modestly elsewhere. Quantum computing stock is surging nearly 13% after the company issued a strategic roadmap towards scalable quantum and photonic manufacturing. And both Ford and Amazon announced a new partnership this morning where Ford's franchise dealers will be able to sell certified pre-owned vehicles through Amazon. The deal comes a year after Amazon said it would allow auto dealers to sell cars through its site, starting with Hyundai. I'm Tucker Silva, and that is Wall Street Watch.
Okay, so we got a piece here in the Wall Street Journal. The headline is why we could use a good long bear market. And unless the reason is because you want to make everyone feel immense amounts of pain and not be able to do the things that they could do if you were not in a bear market, there's not really any good reason to do so because bear markets suck. And I feel like this piece is basically the equivalent of... This piece really comes off as like the people online who, when there's a hurricane announced, get all excited about like, oh, it's going to be a Cat 5 without like realizing, hey, the actual storm kills people and damages lives and ruins entire metro areas.
But don't you feel like we've gotten a lot of this over the course of the last couple of years?
Yes, and
this cheering for a recession.
It sucks. Like I feel like people just don't remember what a recession is actually like because it's been so long that since we've had.
I'm going to quote the piece here. A downturn like 07-09, when U.S. stocks fell by more than half, can be both awful and therapeutic. So let's focus on the therapeutic part. What part?
Yeah, like I need to go to therapy because like
what part of
it
1 in
sucks
10
so much.
What part of 1 in 10 people looking for work and unable to find it is therapeutic? What part of people losing their homes, losing their livelihood, permanently unable to borrow money because their credit scores get destroyed, is therapeutic. Like, again, I am not excusing the bad behavior that led to the Great Recession by doing this. Like, the bets that Wall Street was making and all of that stuff was stupid and led to serious problems. But then a whole bunch of people that weren't responsible for it paid the price. So cheering for a prolonged downturn should just never really happen. I think it should be acknowledged that it's a natural part of the system, that I do suspect at some point we will again have a prolonged downturn, and I acknowledge that it has been now 15 plus years since we've had one. But I don't welcome it.
No, it's not something that you root for. I think you can certainly say, hey, like, when downturns happen, like, yes, you can end up getting rid of some of the problems that happen in markets as a result, but like, I don't think you can ever, like, you should never publish a piece like why we could use a good long bear market. I think you can also end up, by the way, with some of those, the weeding out of like bad crap in markets without a really long bear market. Case in point, the SPAC mania of 2021 and 22, specifically in the EV space, we've basically worked through without having to go through a broader bear market because people decided, hey, we don't want to buy EVs in the quantity the market is producing, and we definitely don't want to buy EVs that are being pushed down a hill by their founder to make it look like they're moving on their own power when they're not. And so we're actually going to prosecute those people for fraud. And so the market worked that out without having a larger blow up. Now, some of that is just because the size of that bubble didn't get big enough to impact the broader economy. If we do end up finding out that this whole AI, valuation, crazy, growth thing is bubblicious, then there's going to be more pain that's felt over a broader swath of the market over a longer time period. And I don't think any of us are going to particularly like it because the consequences are likely pretty severe.
Just again, calling out some of the bad stuff. Right? I'm going to focus on the 2008 recession since that's what this piece focused on. Stocks dropped by 50%. It took 66 months for them to recover back to where they were.
Like, ask anyone who retired then what it was like trying to figure out how you could live off your portfolio during that time.
It took 66 months for the stock market to recover. It took, I'm trying to find out, 10 years for the labor market to recover.
It's 120 months.
120
months.
10 years
and those are
for
years
the unemployment rate to get back to where it was pre-Great Recession. So, again, you can... I welcome all the, complaining about the stock market, complaining about speculation. I am critical of the market or the gambling type of mentality that markets have created as of late. But remember what other stuff comes along with a prolonged downturn, because it's not just, the stock market goes down by 50%, it stays there for a little while, and I keep my home, I keep my job, and I'm able to put food on the table.
You don't know if you're going to be one of the people that's, hugely impacted by this, and this is why, no one should root for bear markets. It's not something... Again, I do feel like the only reason this piece gets published is because we haven't had a prolonged bear market in a long time. Like, imagine writing this piece in 2011 and what people would have said about it then.
Yeah.
It's just like, no. Now, I do want to talk about something that Mark Fandetti forwarded over to me over the weekend. It ties into this a little and some of the concerns that we've had, and what I'm talking about is what's going on in the private credit space.
Oh, good.
Because this is getting pretty gnarly right now, and kind of gross. What?
You want to do it on the other side?
Yeah, we could do it on the other side.
Let's do that.
Yeah, I got something great to talk about right after this.
Breaking business news as it happens, only here on the Financial Exchange Radio Network.
We're proud to announce that Circle K is now the official convenience store of the DAV Department of Massachusetts. At Circle K, supporting those who bravely served our country isn't just a commitment, it's a heartfelt mission. Circle K is honored to stand with the DAV Department of Massachusetts to ensure that veterans receive the care and recognition they deserve. If you'd like to do your part, please visit davma.org. Thank you for standing with Circle K and the DAV Department of Massachusetts, and thank you, veterans, for all you've done.
New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com. The U.S. Virgin Islands isn't just a postcard. It's alive with rhythm, culture, and celebration. This December through early January, St. Croix lights up with the Crucian Christmas Festival, a heritage carnival tradition dating back to the 1800s. There are incredible parades through Frederiksted as the festival village buzzes with live music, reggae, soca, and local island beats, as well as streets filled with the scent of authentic Caribbean flavors. Beyond the festival, there's St. Thomas, fresh with cruise hub energy, duty-free shopping, and panoramic views at Maggins Bay. St. John is quiet, wild, and pure, where every trail and beach is its own adventure. Explore one island or all three. Each offers something unique, all with warm hospitality and that easy island vibe. Travel from New England could not be easier. There's no passport needed and no money to exchange. This holiday season, plan your escape and fall naturally in rhythm with the heartbeat of the islands. Visit usvi.com and book your trip today. That's visit usvi.com. Estate planning isn't just about taxes. It's about peace of mind. At Cushing & Dolan, we believe your plan should protect your family, not complicate your life. A joint revocable trust can help you do both. It lets you avoid probate, which means no court delays, no public filings, and no stress for your loved ones. Your estate stays private, and your family stays in control. Our new guide, The Simplicity of Joint Revocable Trusts, also explains how a trust can protect your children's inheritance from creditors, divorce, or bad financial decisions down the road. This guide makes it easy to understand why a joint trust may be the smart move for your family's future. Call 866-848-5699 right now and ask for your free copy of The Simplicity of Joint Revocable Trusts. That's 866-848-5699. Or request it online from our website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
All right, so here's the deal. There's a company by the name of Blue Owl.
I have one of their hats.
They are an asset manager, and they've got a huge presence in the private credit space. For those of you listening wondering, like, what the heck is private credit? It's basically any loan that's made that doesn't trade on public markets. But, like, calling it private credit makes everyone think it's, like, something special, like there's a secret sauce there, and there's not. Private credit managers like to tell you, hey, this gives you like a more stable path, like it's more stable than public credit. Well, that's only because they don't actually market to market on a day-to-day or month or week-to-week or minute-to-minute basis. They just only revalue them much less frequently. And
it's like how your home gives you a much more stable path because you don't get an update on the value of your home every 30 seconds.
Right. Or as an example, if you only looked at your 401k at the end of each year, you'd be like, oh, like it's pretty stable, when in reality it can be gyrating a ton in the middle. So Blue Owl is a huge manager of private credit, and they love to manage private credit because the fees are high, and it's been a good spot to be in just raising money for the last 10 to 15 years, quite honestly. Like, there's been a lot of money raised, and I understand why there has been. I understand the incentive structure. So here's the thing, though. Private credit started to come under some questions in September when we had a couple bankruptcies that popped up, Tricolor and First Brands. And now you've got this over the weekend that the Financial Times is reporting. The $1 billion, I'll quote, like, effectively, here's what's going on. They have a private credit fund called Blue Owl Capital Corporation 2. It's not listed, so again, it's not publicly traded. You don't see it on markets or anything like that. And pretty much, they received redemption requests for 6% of the value of that fund last quarter.
Explain redemption requests.
If you are a holder in a private credit fund, you can't just go and press the sell button on any particular day.
Right.
You have to submit a written request. Usually it's a form template to the manager saying, I want to redeem X shares at the next redemption date, which typically is on a quarterly basis.
Got it.
Blue Owl decided, hey, we've seen 6% in redemption requests. We are closing the door and not allowing these redemption requests. And what we are going to do is instead we are going to merge this Blue Owl Capital Corporation 2 fund into the publicly traded, so this is a private credit vehicle that trades publicly, Blue Owl Capital Corporation Fund. It has the ticker OBDC. And that fund, by the way, happens to be trading at a 20% discount to its net asset value. What that means, in no uncertain terms, is the assets inside of there are valued at X, but the stock is trading at X minus 20%.
Why would something like that happen?
Because the public investors don't believe the valuations that are listed on it. So what this means is that the holders in this Blue Owl Capital Corp 2 fund are taking a 20% haircut in many cases instead of getting the liquidity they wanted. But now they can sell whenever they want on the public markets, but you've got to take a 20% haircut in order to do so. This is just screaming to me.
I don't think the deal's done, by the way. I believe they have to vote on it.
They have to vote on it. But this is screaming to me that it is mid-2007 and mortgage-backed security funds are facing redemptions and trying to figure out where the liquidity is going to come from and merging funds and this and that. Like, it feels like 2026 is going to be the year of private credit blowing up. We just don't know how big that blow up is going to be.
And I always like to bring it home. Why does it matter if I don't own any private credit whatsoever? Because I think it might not, but it could still matter to everyday Joe who learned about private credit 5 minutes ago when we started talking.
There are a few different reasons. The first is one of the biggest buyers of private credit, insurance companies. They love to buy the stuff, and I get why. It's generally yielding high single digits or low double digits, and if you are taking in a bunch of premiums each year from individuals and needing to invest them in something that generally has appeared to be stable while still earning a high rate of return, this has been the area that you've gone. So things that you could end up seeing as a result of this, again, if things go badly, which I don't know where we're going. No one knows how big this is going to be. So
Sure.
I want to be clear. Like, I don't know if this is exactly where we go. But if things go badly, you could end up with insurance company bailouts. That's where this could go. Or some.
That's a worst case, yep.
Small insurance companies even going under, potentially.
Yeah, that'd be a worst case.
Other reasons why this matters. This affects overall lending markets.
Right.
Even though these are privately held instruments, they can still end up having an effect on broader credit markets, and that can affect the plumbing under the surface as well as overall lending to companies.
A real direct connection here. One of the sparks in this private credit space was a company called Tricolor that made loans to general consumers who are trying to buy cars. They got their funding from private credit. If that dries up, their interest rates go up, and there's not the ability to do it. So any drying up of credit conditions affects everybody, and it's just unclear how big that possibility is.
And so everyone out there is going to be looking at their pools of private credit now being like, okay, Blue Owl's giving their investors a 20% haircut on this one fund. What's our stuff worth?
Yeah.
And nobody knows right now.
Yeah.
It could be good, it could be bad, but if you're asking the question, it's usually not great.
Estate planning isn't just about taxes, it's about peace of mind. Cushing & Dolan believes your plan should protect your family, not complicate your life. A joint revocable trust can help you do both. It lets you avoid probate, which means no court delays, no public filings, and no stress for your loved ones. Your estate stays private and your family stays in control. Cushing & Dolan's new guide, The Simplicity of Joint Revocable Trusts, explains how a trust can protect your children's inheritance from creditors, divorce, or bad financial decisions down the road. This guide makes it easy to understand why a joint trust may be the smart move for your family's future. Call 866-848-5699 right now and ask for your free copy of The Simplicity of Joint Revocable Trusts. Once again, 866-848-5699, or you can request it from their website, LegalExchangeShow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Just one more point on this. You mentioned it. I think it's worth repeating. These types of assets, these types of alternative assets, are specifically marketed and sold as, hey, look at this. It's a good return that does not correlate, and it doesn't have the type of volatility baked into public equity markets. Investors in this specific fund today are learning that that's kind of irrelevant when the you-know-what hits the fan.
Yeah.
Because what happened today is yesterday this fund was worth X, now it's worth X minus 20%, assuming the vote goes through.
Yeah.
And, being worth X on paper is pretty useless when you try to redeem your cash and the company says, oh, you can't do that.
Volatility can never be... Volatility's like energy. Not to get all physics on you, but this is one thing that I do believe to be true. Volatility can't be destroyed. It can be transformed into a different form. In this case, the volatility is, can I redeem when I want to for what I want to? This is it doesn't go away. It just gets transformed into something else. And you have to be aware of that. Something that is volatile, such as the value of a loan, you can't just say, oh, well, we put this in a wrapper where it's always worth this. No, that doesn't work. Even if the company physically guarantees the value, which they don't in these cases, I want to be clear, then you're saying, okay, the volatility is not with what I own, but with the company's financials. You can't ever eliminate volatility. You can just transform it into something else. And I think that's a really important concept to come back to. And as Mike said, investors are kind of learning that in this case here. Let's take a quick break. When we return, we got a whole bunch more to get to in hour 2. We're talking cost of living. We got Disney and YouTube finally getting together and saying, hey, we can do a deal. We got 401k accounts that have been left behind. We got Fed officials violating trading rules. Oh, good. Again. Quick break. Hour 2's coming up.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much, and they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM. Concord, Boston, the Money Matters Radio Network. Estate planning doesn't have to be complicated. Cushing & Dolan's new guide, The Simplicity of Joint Revocable Trusts, shows couples how to stay in control, avoid probate, and help protect what they've built for their family. Call 866-848-5699 right now and ask for your free copy today. That's 866-848-5699. Or request it online from our website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Mark Vonner is the CEO of Veterans Development Corporation. His dedication to serving our veterans has made an incredible impact on his family and employees. And he is so proud to be the presenting sponsor of the DAV 5K Boston.
This is Brittany Vonner. I'm a registered nurse who is now working as an assistant project manager at Veterans Development Corporation. Working with my father, Mark, has been an incredibly rewarding experience. Our company is dedicated to serving VA hospitals and veteran communities. We don't just build facilities, we build environments that support healing, resilience, and family. We are so proud to see our work directly impact the lives of veterans and the professionals who care for them. This rich history is why we care so much about supporting great organizations such as the Disabled American Veterans Department of Massachusetts and the work they do to care for our veterans.
Join Veterans Development Corporation in thanking our great American heroes. Please visit dav5k.boston to show your support today.
The U.S. Virgin Islands isn't just a postcard. It's alive with rhythm, culture, and celebration. This December through early January, St. Croix lights up with the Crucian Christmas Festival, a heritage carnival tradition dating back to the 1800s. There are incredible parades through Frederiksted as the festival village buzzes with live music, reggae, soca, and local island beats, as well as streets filled with the scent of authentic Caribbean flavors. Beyond the festival, there's St. Thomas, fresh with cruise hub energy, duty-free shopping, and panoramic views at Magens Bay. St. John is quiet, wild, and pure, where every trail and beach is its own adventure. Explore one island or all three. Each offers something unique, all with warm hospitality and that easy island vibe. Travel from New England could not be easier. There's no passport needed and no money to exchange. This holiday season, plan your escape and fall naturally in rhythm with the heartbeat of the islands. Visit usvi.com and book your trip today. That's visit usvi.com.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Owning Real Estate in Retirement. Mike, for someone who wants to own multiple properties in retirement, maybe a warm weather and a summer property, what do you end up doing as far as, trying to negotiate and navigate that decision?
Well, it's a lot of questions to answer. How much time are we going to spend in one place versus another? Where am I going to be a resident? If I am, leaving between two different homes, where do I feel comfortable being a resident? I get this question all the time. How much will I get in tax savings, for instance, by moving to a no income tax state? And what ends up happening, though, sometimes is they make that decision based on income tax and don't realize where a lot of the cost savings comes, which is estate taxes. And so if I'm going to own multiple properties, where do I intend on actually making my residency? And will I be able to commit to that for the long term is an important one.
Another piece there, look, at a certain point in everyone's life, that travel and moving between two places and even maintaining two places becomes challenging. When do you typically see those kinds of conversations being navigated?
For most folks, I see it in the 70s and early 80s. That's when this stuff starts to change for a lot of people, but ultimately it's customized to each individual, and you might be able to afford one scenario if you're willing to rent out your property for a period of time. Sure. It really comes down to customizing for your situation.
Our guide this month is titled Owning Real Estate in Retirement, and you can request it by calling 800-393-4001 or going to armstrongadvisory.com. That guide again is titled Owning Real Estate in Retirement, and you can request it by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck, Mike, Tucker with you here, and we've got stocks volatile from minute to minute, but not behaving great at the moment. The S&P 500 right now is down 19 points, about 1/3%. One point this morning I saw it was up about 20 points, so you got about a 0.5 percentage point intraday swing. And this is just kind of what we've been seeing. Dow is currently off about 0.25%, 115 points. The NASDAQ Composite is down 72 points, about 1/3% as well. So all major indices in the red, or the rouge, I believe, is...
Yeah, that's what they say.
That's how they say it on the French exchanges. Yes. U.S. 10-year Treasury down 1.5 basis points to 4.133%. No real movement there. We've got gold off $27.80 an ounce to $4,066.20. Crude oil is down 16 cents a barrel to $59.93 a barrel, and the AAA national average for gas prices is up 0.1 cent to 307 3/10. A year ago, it was 307 2/10. So I'm glad oil traders went through that last year. Yahoo! In any case, kind of just some continued consternation here. I got to tell you, like, something that's just kind of bugging me here is, like, normally this time of year is where you're like, not me personally, because, like, my feet are too, like, my legs are too short to put up on the desk and kick back and relax.
It's Santa Claus time.
Normally, you've got kind of this chase for year-end performance coming from managers. It's just, it's a lower volume time of year. There's not much excitement. You basically don't see anything exciting on the board. The times when you do are ones where you just have to, again, I'm not saying anything bad will happen, but when you start seeing like weird things happening, like, hey, it's a Monday with the S&P down less than 0.5% and the VIX is up, you know, even accounting for the fact that VIX tends to move up on Mondays because of the way the calendar works, and you got VIX up, 1.5, vols on it. It's like, this is just kind of weird stuff that you look at and you're like, you're looking at this saying, what is this market concerned about, and who knows something?
Yeah, I could attribute it to a couple things. One, it could be looming signs of danger. Could also be the result of delayed data on government shutdown. It could be result of a Fed that is maybe in part because of that shutdown giving no clear signal about what they are doing next. And so, yeah, that could be a contributing factor, but I'm not sure I would bet on it.
No, I kind of figured, quite honestly, after we got into November, that, you had some volatility popping up in October on private credit concerns, and then it just kind of went away as we got into earnings. Right. And I kind of figured, okay, like, that's it for that. And now you got these other stories about private credit popping up over the weekend with investors in this Blue Owl fund having to take a 20% haircut pending, their final approval on it. And I'm kind of just looking at this and, like, something just kind of stinks here. And you hope it isn't anything bigger, but it's like you don't normally see this into year end. It's just
we've made this comparison
strange
before, but March of 23. When was the bank failures? 24?
23, Silicon Valley Bank.
We early on were experiencing something interesting there, and you said you gotta just kind of wait and see how bad this gets. And it got bad for a weekend. You had 3 banks ended up getting shuttered and needed to find buyers. And again, part because of the Fed's actions, part because of just where the real problems were, it didn't bubble over. It feels this way similarly now with a stock market that's even richer in terms of valuations.
The key difference then is there's a difference between being illiquid and insolvent. Right? If you're liquid, you have the money, but you just can't come up with the ability to pay it yet.
Yeah.
If you're insolvent, you don't have the ability to, like, it's not there. Like, you just can't provide the funds.
Yep.
And so I think that
we've had some insolvencies recently.
The difference here on this is the problem that those banks faced was just interest rates went up and the valuations of the stuff they had was just out of whack with where their balance sheets needed to be, and you had basically a run on the banks.
Yep.
In this case, the question is, hey, do companies have the ability to pay back these private credit loans? And we don't know the answers yet. Like, we don't, and no one does. This is the thing I keep coming back to. Anyone who says this either is or is not, a big problem, they're not talking because they're the ones that are that actually own the stuff and are trying to manage through it. They're not talking now. So I don't know what's going to happen here. I'm just looking at the situation saying something feels weird and we're going to have to get to a resolution at some point. But this Blue Owl thing over the weekend has me feeling not great, just because it's giving me shades of mid-2007 with companies trying to shuffle the deck chairs on these loans that weren't performing, in that case, in the residential sector. This is companies feeling like they're trying to shuffle the deck chairs with these loans to these mid-market companies. And it's just giving me this feeling of déjà vu, I believe is what they refer to it as.
You're just all French this morning, huh?
Is déjà vu French?
Yeah.
It is?
Yeah.
Yeah. I don't know. I don't speak French.
Yeah.
No.
You got 3 words down.
Oui. 4. Look at that. White House hunts for ways to lower cost of living. Guys, here's the deal. The federal government basically can't lower the cost of living. And now you get these pieces in the New York Times titled, "Economists Hate This Idea. It could be the way out of the affordability crisis." It's talking about price controls.
Yeah, can we also say that mayors also can't really fix the affordability crisis?
No, guys, like, here's the deal is we've kind of gotten to this point over multiple decades, and you're not just going to be able to fix it with any of the tools that are available to you, because it's not a problem that's created by those tools or the lack thereof.
Honestly, maybe it's just been so long since we've price fixed things and set quotas that we need to go through that stupid
just to feel
idea.
how bad it is.
I mean, like, people that lived through the oil embargo and remember sitting in giant lines at gas stations because of this exact economic policy, right? We basically said you can have this much gasoline per week. Remember how that feels and how it all worked. And maybe it's just been a long while since we've done it, and we need to go through that peak stupid period again. Because price controls, there's a lot of things that economists will disagree on, and you'll be able to cite different economists. I have not seen any mainstream economists whatsoever that debate the result of price controls. They result in shortages every time. And that's what we're talking about.
For very obvious reasons, So I also think that when we look at the problems that we're facing on affordability, I mean, guys, like I don't want to keep coming back to this, but I come back to it a lot. Ultimately, what we are talking about here is the fact that incomes have not kept up with prices in the way that people are comfortable with. I don't know why every time we look at this problem, we look at the price piece and not the income piece. Now, I'm not saying that the problem is a minimum wage issue. The national minimum wage is like $7.25 still. The estimates that I've seen are like 1% of the people in the country right now are earning minimum wage or lower.
Right.
So this is not Chuck being like, hey, you need to raise the minimum wage. So let's be clear about this. But what I am saying is, when you look at the way that overall wealth and incomes have grown over the last 20, 30 years, it's clear that we're facing an inflection point right now where you can only pay people like crap for so long before that power of compounding starts to make it a problem in terms of them being able to afford the things they want to afford.
Yeah. By the way, I'm not saying that all the policies that are being discussed recently are trash, right? The Trump White House...
A lot of them are.
A lot of them are. But the Trump White House proposed the idea of lowering or eliminating tariffs on certain food items.
Great.
Like, that promotes freer markets and should help with affordability. I think that's a good idea. I'm not debating that piece. But other things such as price fixing rent, state-owned grocery stores, I see a lot of problems with these
Michael, what do you think?
solutions.
What do you think about a top-down 5-year plan to improve the economy?
Right, like
we could call it a 5-year plan.
Let markets solve these problems. Don't try and create the solutions, because we've just seen over and over how that just doesn't work out the way you think.
Or again, like not to look to be fair. I'm a hammer and I see like nails everywhere on this. More competition reduces the amount of profit and allows for greater affordability generally through that competition, as companies have to compete for business on price, quality, and a whole range of different items. maybe, just maybe, we've gotten to the point where there's so much consolidation in so many industries that there's not enough competition to be able to drive that pricing the way you want. And by the way, it's not just pricing that you drive competition on, it's benefits for workers. Hey, if you have more competition, then maybe the two grocery stores that operate in each region can't just agree to pay the same amount to their workers, and maybe you actually end up with higher wages as a result, and that solves some of the problem. So ultimately where I get to is affordability is not going to be solved by the federal, state, or local government saying this is the right price for something, because there is no right price for anything. What I do think can solve it is more competition, making it easier for businesses to get into business and compete.
Less regulation.
Yes. And I think also, by the way, if you have more competition, you don't need as much regulation because the competition weeds out the weak companies that can't compete. Let's take a quick break now. When we come back, we're going to be joined by Sarah Foster from Bankrate. We're talking about what's going on in the labor market that feels so broken there.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Subscribe to our page and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network. The U.S. Virgin Islands isn't just a postcard. It's alive with rhythm, culture, and celebration. This December through early January, St. Croix lights up with the Crucian Christmas Festival, a heritage carnival tradition dating back to the 1800s. There are incredible parades through Frederiksted as the festival village buzzes with live music, reggae, soca, and local island beats, as well as streets filled with the scent of authentic Caribbean flavors. Beyond the festival, there's St. Thomas, fresh with cruise hub energy, duty-free shopping, and panoramic views at Magens Bay. St. John is quiet, wild, and pure, where every trail and beach is its own adventure. Explore one island or all three. Each offers something unique, all with warm hospitality and that easy island vibe. Travel from New England could not be easier. There's no passport needed and no money to exchange. This holiday season, plan your escape and fall naturally in rhythm with the heartbeat of the islands. Visit usvi.com and book your trip today. That's visit usvi.com.
Hi, this is Chuck Zodda from the Armstrong Advisory Group. Your home is more than just a place to live. It's part of your story. In retirement, real estate can play a powerful role in how you manage your wealth and plan for the next generation. Passing property to family members isn't always easy. One child might want to keep the home while another prefers to sell it. Maintenance costs, taxes, and distance to healthcare services are all important factors that need to be considered, which is why having a clear plan can help prevent family stress while keeping your wishes front and center. Our new guide, Owning Real Estate in Retirement, is designed to help you fit your property into a long-term strategy that supports your life today and preserves what matters most for your future. Get your free copy right now by calling 800-393-4001. That's 800-393-4001, or request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Mark Vonner is the CEO of Veterans Development Corporation. His dedication to serving our veterans has made an incredible impact on his family and employees. And he is so proud to be the presenting sponsor of the DAV 5K Boston.
My name is Ashley Vonner, Director of Operations at Veterans Development Corporation. I wanted to learn the family business under the guidance of my father, Mark Vonner. VDC is more than a general contractor. It's a service-disabled, veteran-owned small business that goes above and beyond for the veteran community. With Mark's military background, serving in the Marine Corps, our company is committed to supporting the Disabled American Veterans Department of Massachusetts. VDC has been the presenting sponsor for the DAV 5K for many years, striving to spread awareness of this great organization. Working for Veterans Development Corporation has shaped me into the person I am today, and I am proud to be a part of this organization.
Please visit dav5k.boston to show your support today.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
The Financial Exchange is now available every day from 11 to noon on SiriusXM's Business Radio Channel 132. Stay informed about the latest from Wall Street, fiscal policy, and breaking business news every day. The Financial Exchange is live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is powered by Circle K Convenience Stores. Circle K is now the official convenience store of the DAV Department of Massachusetts. On behalf of Circle K, thank you, veterans, for all you've done.
As promised, we're now joined by Sarah Foster from Bankrate here to talk a little bit about what is going on in the labor market. Sarah, thank you so much for joining us.
Thanks for having me. I always enjoy it.
So when we talk about this labor market right now, it seems like people that are looking for jobs are telling us, hey, I'm having a pretty hard time finding one. Why is that the case?
That's right. It's a tale of two job markets. That's kind of how we've been describing it. It's a different economy for people who are working, but a completely different environment for those who are looking for a job. I think it's, fair to say that we have seen widespread economic uncertainty. Businesses don't really know how to plan for the future. They're also dealing with higher production costs because of tariffs. It's been a difficult time for really companies to think about their hiring plans, and that's why we've kind of transitioned into this point where we're calling it that no hire but no fire labor market. Of course, though, we need data to really confirm whether that's still the case.
Let's talk about the data side, because we know that we haven't been getting government jobs reports for the last couple months now. Supplemental data around that, privately released reports and things like that. What are we seeing in general?
We are seeing some red flags. There was a pickup in layoffs, that Challenger Gray and Christmas report, which showed that the most October job cuts in over 20 years. That raised, a lot of concerns here about whether the state of the labor market could be transitioning from a no hire, no fire to a no hire, start firing labor market. Of course, though, many economists often point out how the Challenger data has really showed that layoffs have picked up, post-pandemic as companies really started rebalancing their payrolls who had overhired during those few months when the economy was shut down. What all that's to say is whether this is, the broader state of the labor market or whether this just reflects those big, flashy headline companies, Amazon, UPS laying off lots of workers, that's something we can really only see in the federal data. And we, of course, are hopefully going to get our first look at that. The Thursday September jobs report is expected to be released. When we look at this economy overall, one of the things that we do see is that, again, we don't have the updated, Q3 GDP numbers because of the government shutdown, but it seemed like GDP was growing at a pretty good clip in Q3 prior to the shutdown, and Q2 was pretty strong as well. How do we reconcile a seemingly strong headline number for the economy with this weak hiring? It's peculiar. We kind of describe it as a jobless boom. That's because we looked at historically when GDP is as strong as it is, how many job growth and hiring, how much that translates to. Typically a 3.8% quarter-over-quarter growth is correlated with 264,000 jobs added in a month. Of course, the economy added barely anything, 22,000 in August, which was the last month that we have data available for. It's probably because we are reaching this point in the economy where growth is achieved through efficiency and cost cutting as opposed to expansion and hiring. We see companies hiring and investing, or we see companies investing in intellectual property, artificial intelligence to improve their productivity, as opposed to hiring more workers and really expanding at the pace that they did coming out of the pandemic.
Very good. Sarah, thank you so much for joining us today. We appreciate the time.
Thank you for having me.
That is Sarah Foster from Bankrate talking about the labor market.
All right, let's do a little bit of trivia here on the Financial Exchange. And on this day in 2004, Kmart announced it is buying Sears, Roebuck & Company for $11 billion and naming the newly merged company Sears Holdings Corporation. 21 years later, there are no Kmart big box stores in the U.S., and Sears and big box stores are down to a small handful. So our trivia question today: what year did the Sears Holdings Corporation file for bankruptcy? Once again, what year did the Sears Holdings Corporation file for bankruptcy? Be the fourth person today to text us at 617-362-1385 with the correct answer, and you win a Financial Exchange Show t-shirt. Once again, the fourth correct response to text us to the number 617-362-1385 will win that t-shirt. See complete contest rules at financialexchangeshow.com.
Disney and Google, or rather Disney and Alphabet, who is the parent company of Google, who's the parent company of YouTube, who's the parent company of YouTube TV.
Is Google the parent company of YouTube, or is Alphabet the parent company of YouTube?
I don't know, Michael.
Who cares?
It's alphabet soup. Huh? See what I did there? Did I do anything?
Going on.
There we go. There we go. Yep, I knew it was coming. In any case, they finally came to an agreement so that you can have ESPN, ABC, and whatever other channels are on Disney's networks back. And quite honestly, I didn't miss them, and I'm someone who watches a whole lot of sports, but I'm honestly getting to the point where I'm wondering if I want to keep a broader streaming package at this point. I just don't know. Quick break here. When we come back, we've got the trivia answer and Wall Street Watch.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Hi, this is Chuck Zodda from the Armstrong Advisory Group. Your home is more than just a place to live. It's part of your story. In retirement, real estate can play a powerful role in how you manage your wealth and plan for the next generation. Passing property to family members isn't always easy. One child might want to keep the home while another prefers to sell it. Maintenance costs, taxes, and distance to healthcare services are all important factors that need to be considered, which is why having a clear plan can help prevent family stress while keeping your wishes front and center. Our new guide, Owning Real Estate in Retirement, is designed to help you fit your property into a long-term strategy that supports your life today and preserves what matters most for your future. Get your free copy right now by calling 800-393-4001. That's 800-393-4001, or request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
The U.S. Virgin Islands isn't just a postcard. It's alive with rhythm, culture, and celebration. This December through early January, St. Croix lights up with the Crucian Christmas Festival, a heritage carnival tradition dating back to the 1800s. There are incredible parades through Frederiksted as the festival village buzzes with live music, reggae, soca, and local island beats, as well as streets filled with the scent of authentic Caribbean flavors. Beyond the festival, there's St. Thomas, fresh with cruise hub energy, duty-free shopping, and panoramic views at Maggins Bay. St. John is quiet, wild, and pure, where every trail and beach is its own adventure. Explore one island or all three. Each offers something unique, all with warm hospitality and that easy island vibe. Travel from New England could not be easier. There's no passport needed and no money to exchange. This holiday season, plan your escape and fall naturally in rhythm with the heartbeat of the islands. Visit usvi.com and book your trip today. That's visit usvi.com.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about joint revocable trusts. Todd, for couples who already have wills in place, why might it make sense to look at a joint revocable trust, and what can it do that a simple will can't?
Yeah, this is important because a lot of people believe that wills are an estate plan, when really a will is a won't. I've said it many times. It won't avoid probate. It won't reduce estate taxes. It won't protect assets from the nursing home. You're going to need some kind of trust to do that. So that's the most important reason why a will is not enough. Then you need to think about, well, what kind of trust are you doing? Well, in this case, we're talking about joint trusts. And boy, folks, these are so underutilized, but they are really powerful for moderate estates. And today, moderate estates are, below 15 million with the exemption as high as it is. So you can actually make it easier for folks. Put all the assets into this trust. You can jointly put your brokerage accounts and real estate in the trust. It's simple. You don't have to split assets between two trusts. Ease of operation, and it's going to reduce estate taxes, avoid probate, and provide a bloodline plan for your family, even to the extent where if you want to protect it from future creditors and divorces of the kids, you can do that in the trust as well. And the will won't do any of that.
Cushing & Dolan have been helping families like yours for more than 40 years now. Learn how you can avoid probate, eliminate estate taxes, protect your kids' inheritance, and keep your money in your family. Request this brand new guide from Cushing & Dolan called The Simplicity of Joint Revocable Trusts. Call 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, markets are at the moment mixed. We saw a little blip about 20 minutes ago, but right now dipping into negative territory as investors await Nvidia earnings in addition to retailer earnings from Home Depot, Target, and Walmart. Investors also awaiting Thursday's release of the September jobs report. Right now, the Dow is down nearly 0.2% or 81 points lower. S&P 500 down about 0.1% or 8 points. NASDAQ is off merely 4 points. Russell 2000 is down over 0.75% or 18 points lower. 10-year Treasury yield down 1 basis point at 4.129%. And crude oil is dipping just below $60 a barrel. Alphabet jumping by about 4% after Warren Buffett's Berkshire Hathaway disclosed it took a stake in the Google parent company in the third quarter and further reduced its stake in Apple. Speaking of Apple, the Financial Times reported that the tech giant is ramping up its preparations around identifying and appointing a successor to CEO Tim Cook. Apple stock is down over 1.5%. Meanwhile, the 15-day standoff between Disney and Google is over after both companies reached a deal to return ESPN, ABC, and other Disney networks to about 10 million YouTube TV customers. Disney shares are up nearly 1%. And both Ford and Amazon announced a new partnership this morning where Ford's franchise dealers will be able to sell certified pre-owned vehicles through Amazon. The deal comes a year after Amazon said it would allow auto dealers to sell cars through its site, starting with Hyundai. I'm Tucker Silva, and that is Wall Street Watch. And in the previous segment, we asked the trivia question, what year did the Sears Holdings Corporation file for bankruptcy? That would be 2018. Bill from Dunbarton, New Hampshire is our winner today, taking home a Financial Exchange Show t-shirt. Congrats, Bill. We play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Can we talk a little bit just about Tim Cook?
Yeah. Why the hell not?
Briefly, at least.
Would have guessed him older, to be honest.
65.
Yep.
and took over Apple in...
Not because he looks older, but just because he's been running Apple for so long, I would have guessed him older.
Yeah, he's been running the company for 15 years now. Before that, he spent, I want to say it was close to 15 years running operations there. I think, it was 98 when Jobs brought Cook to Apple. So he's spent almost 30 years there. I mean, basically mid-30s through mid-60s. And I still remember after he took over, do you remember there was that period for maybe like 4 or 5 years when every time Apple would give, a little like 10% wobble down, people would be like, well, Cook's not really what Jobs used to be,
He's not the Steve Jobs. Yeah, I remember.
And it's like, no, he's not. I don't want to say better, because I think two things can be true. I think Steve Jobs was absolutely what Apple needed in order to become what it became, simply because we saw Apple without Steve Jobs and it couldn't go anywhere.
Yep.
And I think after Jobs passed in 2011, it's pretty clear that Cook has done a fantastic job leading the company through a more mature phase of its lifespan as well. It's not to say that things wouldn't have been really interesting if Jobs were still alive, but it would be a very different company from what it is today, in my opinion.
Yeah, today it's a mature tech operator.
Yeah.
Rather than I can't call it an exciting innovator today.
You kind of almost wonder how, what would Steve Jobs be doing if Apple were, right. You just have those questions. Like, what would he be doing if Apple were what it is today? Would he still, kind of be pushing things the way that he was, or would he have run out of room the same way that Apple's kind of run out of room to innovate? I don't know. Let's cover this piece from the Wall Street Journal. Forgotten 401k accounts are costing Americans billions in lost investment gains. How and why?
So, important thing to understand about your 401ks. One, employers oftentimes auto-enroll you. And so unless you're looking at your paycheck, which you should, but sometimes people actually genuinely don't notice that they've been established in a 401k plan and that portions of their paycheck are going into that 401k plan. Buried deep in the disclosures that you get about your 401k, it says something about what happens if you leave that company and your balance is of a certain dollar amount. And this is, again, there is no standard across the board, but oftentimes workers with less than $10,000 or less than $5,000 in those plans will have by rule the plan terminated, and it'll go into either an IRA. Sometimes they'll send you a check. That has to be really small. If it's like under $1,000, that's where it happens. But This is all nuanced and different by employer. And the problem is if they send you a check or turn it into an IRA, in the case of the check, you're going to be taxed on it and penalized on it. In the case of an IRA, it's going to sit in cash in most cases or in all cases, and you may miss out on future returns.
How does someone figure out what the situation is with them in a potential old 401k?
One, reach out to your former employer. If it's been a really long time, you may need to reach out to abandoned property. They would turn it into wherever you were living at the time, because here's where this is actually happening, especially with young people. You're moving every year. They may send you a notice to your old address. If you didn't set up mail forwarding, once that mail gets returned, then the account becomes abandoned and restricted. If it lasts a certain period of time, they have to turn it over. This stuff can happen. And so, first step would be you can go take a look at the state abandoned properties, but reach out to that old employer, figure out where this stuff is. But most importantly, just don't let it get to this point, because the way it gets here is people suddenly have 5 old 401ks at 4 different old employers, and that's how you lose track of this stuff. It's not to say do X or Y with it. It's not to say cash them all out. It's not to say roll them all into IRAs. There are benefits and drawbacks to doing that, but consolidating down is really the only proven way that I've seen to make sure it's at least able to be tracked and monitored in a meaningful way. If you are in a situation where you might have an old 401k or you have a current 401k, you've got IRAs all over the place, and you're just trying to figure out, hey, what's the best positioning for me as I continue to save for my future, give the folks at Armstrong Advisory Group a call. Retirement plans are, by their very nature, quite complicated. We've gone through all the rule changes when it comes to them over the course of the last few weeks here as we've gotten new contribution limits. But far too often I see people, for instance, have no idea whether they should be contributing to traditional or Roth. And then that question of what do I do with the old ones comes up every single day. Again, the Armstrong Advisory Group offers free consultations for you. The number's 800-393-4001. You can book a time for us to call you back at armstrongadvisory.com. But once again, that number, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Piece in the Wall Street Journal. Layoff tactics keep changing and the blunders keep coming. So Amazon, as an example, they started laying off 14,000 plus employees in the last month. And some of the people they were laying off got a text message while they were at home getting ready for the day saying, hey, go check your email. And then they got an email titled Update Regarding Your Role at Amazon that said, unfortunately, your role is being eliminated. So look, there's no good way to lay someone off.
No.
There are some bad ways, though.
I mean, again, Amazon can do whatever they want. I'm not saying that I want some sort of regulation requiring you to do this.
No.
But at a bare minimum, can't we all agree that if you're firing somebody, have the human decency to put a human in charge of it and either do a bare minimum phone call seems appropriate.
And basically what Amazon and even what you hear labor consultants say is, look, you need to do this to as many people as at the same time as possible so that, rumors don't spread and this and that. And I get that, but look, you hired all of these people seemingly not through text message.
Actually, in Amazon's case, I'm not sure, but yeah.
I'm kind of the opinion that when making hiring and firing decisions, you know how we've complained about how gyms let you sign up online but then make you come in order to cancel your membership? I'm kind of the mirror belief for hiring and firing, which is, look, whatever way you hired your employee, you need to fire them the same way because it's basic common human decency.
Again, I'm not a proponent of
you don't need to legislate
the French labor system where you basically can't fire anyone ever.
No.
But
just be a person about it.
Be some basic human decency. If you're going to fire somebody, do it to their face.
And you don't have certainly you don't have to be well, this is so hard for me. No, it's hard for the person you're laying off. Okay? Don't be like that CEO who was crying. It was this is the toughest day of my life. It's dude, you just laid off your whole team.
Yeah.
So
probably worse for them.
Yes. But again, you can have a short, succinct, informative conversation as an actual person where you do that and at least be human about it. Because this is not... Target had one. They had employees log on to a Zoom call, and the audio glitched out for the first 5 minutes, and so employees didn't know what was happening.
Oh, good.
And so it was kind of they didn't know that they had been laid off in some cases. So I just think, again, there's no good way to do it, but there are plenty of bad ones, and companies keep finding new bad ones. And
way to go, Amazon.
It's not great. Let's take a quick break. When we return, Stack Roulette.
Hear the Financial Exchange every day from 11 to noon on SiriusXM's Business Radio Channel 132. Keep it here for the latest business and financial news and the trends on Wall Street. The Financial Exchange is now live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
Mark Vonner is the CEO of Veterans Development Corporation. Mark is a career military man, having served nearly 20 years, and we are so proud to have him and his business as a key partner and a presenting sponsor of the DAV 5K Boston. The DAV Department of Massachusetts does incredible work, and it's one of the first organizations that Mark became familiar with after his military service ended back in 1984. As Mark built his company, he knew he'd be giving back to fellow veterans who needed jobs, support services, medical supplies, and so much more. Mark works with disabled veterans every day, and it's one of the key reasons why he's such a big supporter of Dan Stack, the DAV Department of Massachusetts, and the DAV 5K Boston. You can join Mark Vonner and his team and make a donation to the DAV Department of Massachusetts or become a sponsor of the DAV 5K Boston. Simply visit dav5k.boston. That's dav5k.boston.
The U.S. Virgin Islands isn't just a postcard. It's alive with rhythm, culture, and celebration. This December through early January, St. Croix lights up with the Crucian Christmas Festival, a heritage carnival tradition dating back to the 1800s. There are incredible parades through Frederiksted as the festival village buzzes with live music, reggae, soca, and local island beats, as well as streets filled with the scent of authentic Caribbean flavors. Beyond the festival, there's St. Thomas, fresh with cruise hub energy, duty-free shopping, and panoramic views at Maggins Bay. St. John is quiet, wild, and pure, where every trail and beach is its own adventure. Explore one island or all three. Each offers something unique, all with warm hospitality and that easy island vibe. Travel from New England could not be easier. There's no passport needed and no money to exchange. This holiday season, plan your escape and fall naturally in rhythm with the heartbeat of the islands. Visit usvi.com and book your trip today. That's visit usvi.com.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
The Financial Exchange streams live on YouTube. Subscribe to our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
This year's DAV 5K was another incredible success with over 1,500 runners and walkers, all supporting the Disabled American Veterans Department of Massachusetts. The race results and photo galleries are available to see, and if you didn't have a chance to participate but would still like to support our great American heroes, visit dav5k.boston. Your gifts help fund free rides to medical appointments for veterans and the nation's first DAV-led housing initiative, providing homes for single veterans and veteran families. Go to dav5k.boston and make your donation today. That's dav5k.boston.
Mike, what do you got for me?
I want to talk about tech moguls building data centers in space. Ooh. So if you didn't think that the AI trade was quite frothy enough, now they are talking about building AI data centers on the moon. And they have a bunch of arguments.
Who's going to use data centers on the moon, Mike?
Great question. Maybe they're going to beam the finished data back to us via satellite. Unclear at this point.
They're going to beam me up.
But here is their main compelling argument as far as I could tell. Yeah, you've got, solar panels could be more efficient because of a lack of an atmosphere there and constant sunlight, which, okay, I'll buy that for a moment. But mainly the argument seems to be that there's no regulation for developing the moon. And so, you can't get those pesky NIMBYs talking about their complaints about a new nuclear power plant in their backyard because nobody lives on the moon. So we can develop as much AI data centers as we want there, which seems like a pretty piss poor reason to develop AI data centers on the moon.
Yes and no. I mean, like, I'm thinking this out. Generally, the reason why we have regulations about why you can build what you build where is you don't want something to be a public nuisance. You don't want it to cause, pollution that prohibits people from living there in the future and things like that. And so, on one level, I kind of understand it. Like, if you turn the moon into a radioactive wasteland, it doesn't really affect anyone.
Guess.
The counterpoint is...
Doesn't have an atmosphere, so I'm not sure where that radioactive waste would end up. Probably on our planet.
Right, like, I don't exactly know the physics of, like, how this works with, alpha and beta particles and, like, what stops them and what doesn't. And I also just think, like, again, like, not to get all Jurassic Park on you and everything, but, like, just because you can do something doesn't mean you should do something.
Right.
So, I still have some second thoughts about it, but I understand the concept of...
I like the idea that regulation is so bad that we need to go to the moon. Something on the moon.
I mean, that does kind of feel like something my 2-year-old would say. Like, Dad, I don't like the rules around throwing food here, so I'm going to go to the moon.
Yeah.
Okay.
It's Jeff Bezos.
Good luck. I want to talk about this piece from the Wall Street Journal over the weekend. It's titled, "The Ultra-Rich Are Spending a Fortune to Live in Extreme Privacy." Ooh. It's not in the stack.
Okay.
But the cover picture is Masood and Stephanie Shoji. I don't know how to pronounce the last name. I'm sorry.
Okay.
And it's them, like, climbing onto a private jet with what looks to be, like, a very expensive handbag and outfit and this and that. And the whole piece talks about, like, you can, go in through these, back doors to these private clubs and private restaurants and this and that. And it's all about privacy. And then, again, like, I don't know who these people are because this is not what I watch, but then they just slip in, like, 2/3 of the way down that Stephanie is the president of this real estate group that her and her husband run and a cast member of the Real Housewives of Miami.
Doesn't seem all that private.
I don't think this is a privacy thing.
It's an exclusivity thing.
And this is
I can have something that you can't, not that I want to use it privately. If you wanted it privately, you wouldn't have it published in the Wall Street Journal.
Right, just call it what it is. Like you shared your names.
You love the image of yourself.
And you have, quotes in here such as like, the conversations in these places feel safer and feel deeper. Well, probably because you don't have, the other 330 million Americans being like, gee,
why feels safer because there's no poor people there.
Right, like just say what you want to say. What you're actually saying is that you don't like being around not even poor people, just like the
mass
masses
affluent.
of like you don't like being around people who aren't as wealthy as you.
Yeah.
And I'm not saying I agree with that, but if that's what you want to say, like that's fine. But don't like cloak it under the guise of privacy when you have a TV show talking about basically like how awesome your life is and the stuff that you do on it.
That is.
So I found that just kind of comical.
Yeah, that is pretty solid. In the category of other things that I don't understand, Apple is out with a new $230 cloth iPhone pouch. It's already sold out. $230 for, again, I'm just seeing the image online, what looks an awful lot like a knitted sock.
It looks like Nana's iPhone holder. Like she made you this for Christmas.
If you want a sock, I can just
your
get
phone
you a sock.
Shouldn't be in your pocket like that.
I need your little satchel there, hun. And it's like $230.
Also, just a few things about this. One, looks exceedingly easy to steal. I think it would be better in your pocket, given that it's now like a $1,500 piece of technology.
I don't know. This thing looks pretty strong. Like, did you see the close-up of the strap?
Yeah, I mean, but again, like a quick pair of scissors looks like it would do that thing in. And I know you can say that about a handbag and everything else, but I'm just confused as to why something as small as a phone needs a sock-like pouch to live in. But again, I don't understand fashion, and good for for Apple for selling out of these in 20 minutes. Yeah, they really did a number on this thing.
What if we actually made a sock that could hold an iPhone?
Again, I have lots of socks that could fit an iPhone.
No, but like not because you don't want it touching your skin in the sock. That gets sweaty and messy. What about like a pocket
in your
on the sock?
Got it.
For your iPhone.
I mean, sell the idea to Apple. You may be onto something, Chuck.
I think we could call it.
It's a collaboration with Issey Miyake, which I know you're very familiar with.
Or it could even have a plug on it, Mike. It could be the eye socket.
Jesus. Lots of good ideas.
That is a triple entendre in case you're not paying attention. Let's take a quick break for the rest of the day. Tomorrow, we have more expensive Apple stuff, hopefully.